Hey everybody, Mortgage Nerd here. Want to talk to you today about the VA IRRRL, IRRRL, that's the interest rate reduction refinancing loan. It's really the best refinance that exists in the mortgage industry because it's the most common sense. And you know what, I could go through all the details, or you could check out this video, here's the thumbnail, where I went in depth about this program 4 years ago, got almost 50,000 views, and it tells you a lot about how that works. But what I'm going to talk to you about today is how the VA IRRRL will work today in today's market. As a veteran myself, talking to hopefully some veterans that have a VA mortgage, maybe you got your first VA mortgage or second or third in the last year or two, and you're going to start getting all these letters in the mail bombarding you about refinancing, doing the VA IRRRL. I want you to be very careful because a lot of these lenders, they send out these generic letters to everyone saying you're pre-approved, saying they're going to get your rate in the 4s, for example. The problem is, to get that rate in the 4s, you're going to pay points, you're going to pay extra closing costs. So maybe right now you're in the high 6s and you think, oh my God, that's great, I'm going to lower my rate into the 4s and I'm going to save a ton of money, but you're really not, because the rates might get into the 4s in the next 6, 12, or 18 months, and you could just wait and refinance until then. Or something I'm doing right now for one client is we're dropping their rate from 6.6% to 5.7%. They're going to save over $6,000 a year. Now, what I'm also doing is I'm crediting them money. I'm giving them some money towards their closing costs, so they're paying very little closing costs, less than $2,000. It might be lower when it's all said and done, but if you're going to save $6,000 over the next year and you're going to pay $2,000 in cost, it makes sense. It helps them save money out of pocket as well. It'll help them over the next 12 months. Plus, they can quote unquote skip a couple payments. They're not actually skipping it, it's just being rolled into the loan. But you know what, for these clients, it's really helping them because the payment was so high, they were struggling to make it and get it done, but this is going to provide some relief. In this case, it's beneficial. Now remember, I'm going from a 6.6 rate to a 5.7 rate. If I drop it to the 5.49, they don't get any credit from me towards their closing costs, but they're also not paying points. So any client that comes in with good enough credit can drop their VA rate to the 5.49 without points. When you're talking to other lenders, make sure you ask about that. How many points am I being charged? What are my total closing costs? And then you call me and say, hey, let's compare these. Maybe you're not in one of my states and I have to refer you out to someone else like that can help you the way that I'm working on helping you. So either way, there's an ethical way of doing VA IRRRLs. I have a lot of experience with them. And my goal is to help you now and help you again in a year, because if rates do go down to the 4s and the VAs, or even in the high 3s, which is possible for VA, not for conventional, for VA, yes, then you want to refinance down. But what happens in 3 or 4 months if inflation starts going up and rates go back up? Now you're stuck an entire year waiting for that much lower rate, still paying the higher rate. So in some cases it might make sense, other cases it might not. It's my job to sit down with you and give you the ethical advice to see what works and doesn't work. Again, one veteran to another. Phil Stevenson, Mortgage Nerd. Thank you.